This is a 22-year-old printer. Is this still in play? And find some of these assets that don't look right and go in, oh no, we got rid of that. You've been paying taxes on that the last 10 years.
Because let me tell you guys, if we send over a fixed asset depreciation detail report, which is basically a statement on the 1120, your corporate return, 1120S or your 1065, it's a supplemental statement. Basically, if we were to send that over as a schedule, they're going to look at all the assets. Okay. But the county does their assessment. So if we're talking about an asset like a computer or a printer that's been on the books for 16, 20 years, even though the IRS says that asset's been fully depreciated, if it is still in service, they think that it still has a value and they're going to tax it. It needs to be off the books. Because I can't tell you how many times that we took over an account from another CPA or another accounting firm, and they had these assets that were on the books and they just left them on the depreciation detail report. And then they would send those over to the property tax consulting firm, still assuming that they were still viable fixed assets that were still in operation, and they were not. And so they were still paying taxes on that. And they're like, I don't know why they left it on there. I guess that's what the client said. I don't know. And what happens is the property tax firm is not communicating with the CPA or the EA that's filing taxes saying, hey buddy, are those assets still viable assets? If not, we need to get those off the books. Okay.
Exactly.
Or
this doesn't look right.
it doesn't look right. Okay. And the same thing goes for inventory, because inventory is part of the rendition as well. There might be some old scrap metal